Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Today, I'm pleased that we have John Jagerson with us, and John will be talking about leverage in the FX options market. This is a fascinating topic as the spot market is undergoing some potential changes, and John will be talking about that. Of course, we don't know the final changes. That's subject to regulators, but there are some changes coming, and John will be talking about the opportunities in the FX options market. John's an author, a co-founder, and he's a contributor to learningmarkets.com. And I urge you to bookmark his site, learningmarkets.com, so you can learn more about all the facets of the financial markets. He's got things on ETFs, options, currencies, so many more topics. So please go and check out learningmarkets.com. Of course, anything that we discussed today should not be construed as investment advice. Taxes, margin, and commission are not included. And you might want to go to a site called optionseducation.org to learn more about options. Of course, considering learningmarkets.com and fxoptions.com. You can trade these currency options right through your equity options broker. They're exchange-listed securities. They're settled in U.S. dollars, European-style exercise, and they can, of course, be traded as spreads. The symbols are right there on your screen, and you can go and learn more about all the currency options that are available at fxoptions.com. Without further ado, I would like to introduce John Jagerson. John, thanks for joining us at the IC. Really appreciate it.
Thanks, Steve. Thanks a lot. It's always fun to be here. And today I got several notes back on and today I hope to answer a question I've been getting letters about or emails about for a while, actually. And it's related to some of the changes that are occurring in the Forex market and what's my opinion about what's available as an alternative in the FX futures market. I think these are actually really excellent questions. And right now, while the industry, the Forex industry is being disrupted, and it's all of our contacts too on a regular basis on the institution, on the Forex, over-the-counter Forex side, this is really presenting a lot of changes. And I think that this makes it a good opportunity for traders to start thinking about some of these changes and about some of the alternatives. So what I would like to do, I tend to like to spend more time looking at the charts, and I have a chart, well, a couple of charts today, and a spreadsheet that we're going to be looking at to make our point. So I want to make sure that Steve, maybe you could give me a heads up if you can't see my charts right now. But what we should be looking at,
we're looking at your Metastock programs. It looks perfect.
Okay, excellent. So we're going to flip back and forth a little bit to between a couple of charts and a spreadsheet because I want to make a particular a point today. And I know that we've got actually a lot of Forex traders on here in the presentation today because I've already gotten a couple of notes back from folks who are online right now. So I hope to be able to address some of your questions right up front. So, let's talk about. Let me put one quick disclaimer up in front of my presentation. I have, and I'm willing to admit this, a fairly strong bias towards exchange-traded products over not off-exchange traded products. So I think that the benefits of transparency are well worth any possible disadvantages or any of the advantages that may be offered off exchange. And I actually think that this is particularly true with Forex versus currency options is just one case study. In the Forex market, one of the things that attracts investors is leverage. So these advertised leverage rates. If you don't know this, by the way, there are a lot of Forex dealers, over-the-counter Forex dealers, will advertise leverage rates that are anywhere from 100 to 1 to 400 to 1. And here's what that means. So right now, what we're looking at, this is a chart of the Euro USD exchange rate. So this is the dollar versus the euro. So right now, it costs $1.34, 34.1 cents really to buy a euro. And as the dollar gets stronger against the euro, this particular exchange rate will drop, which it has been here lately. So we've been dealing with, problems in Greece and all this kind of stuff that's been detrimental to the value of the euro. And, traders have been seeking shelter from that particular problem. And so they've been bidding up the value. So they've been moving their investments into dollars and moving out of euros. And that's changed the exchange rate. So now it costs fewer U.S. dollars to the euro. Now, things look like they may be settling out a little bit. I've been thinking that the dollar was due for a correction, meaning the dollar likely to get weakened here in the near term. I've been thinking it's been coming for a little while. But we've just been getting a little bit of a bounce the last couple of days where it's now costing, more dollars to buy a euro. And what Forex traders will do is, if they sign up with an over-the-counter situation, they can essentially control 100,000 units, or actually, let's go with the mini contract. They can control 10,000 units of a currency for, if they have 100 to 1 leverage, well, they could control that for $100. So if they had an account that had at least $100 in it, then they have the ability to control 10,000 units of a particular currency. And of course, if the currency goes way up, great. If they were long. If they were short and the currency goes way down, that's great too. So they can trade both sides of the market, and that leverage could result in big profits. Here's the problem, though, and you don't have to take my word for it. And I'll tell you why here in just a second. So leverage also is when it's been used in this industry for a long time as an advertising gimmick, because in all reality, any trader who actually was using the maximum amount of leverage, like they were maxing out their account, buying as many contracts as they possibly could based on the leverage ratios that they were enabled to use, they're broke very quickly. If you want to see, by the way, a little bit of insight into what happens to the majority of Forex accounts, there's a major Forex dealer who was actually moving towards an IPO last year, and they disclosed their numbers. So you can go look it up yourself. It's all public information. You can back in and see what their account churn rate was like. Now, so what I'm going to do is contrast, now, but don't get me wrong. I understand that leverage is exciting, and it enables, an investor with a small amount of capital to make a fairly big investment. So I understand that it is exciting, and for traders who don't have any problems with risk and willing to take on a little bit of risk, it can be very interesting. But what I want to do is contrast what goes on in the Forex market versus what leverage is like in the options market, the currency options market. Now, it's a little bit different. It's not as easy as saying, well, if the over-the-counter market is 100 to 1 to 400 to 1, then the options market is 25 to 1 or 50 to 1. Options don't really work like that. But if we make a couple of assumptions, we can do a little bit of comparison. And so that's what I wanted. That's the question I've been asked over and over again since some of these rule changes have been proposed.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.